And we're live, everybody. Welcome back to Strongman Personal Finance. I'm your host, Christopher Bell, hero, certified public accountant, more attractive than you. I got two buddies here. One of them is Jay Nagy. He's the guy in the paperboy hat. Please go subscribe to his YouTube channel. He's got some great videos with Peter Lynch and some personal investing videos that he's made. And then we have a young man from Canada. His name's Investing Sucks. Please go subscribe to his channel as well. Anyway, welcome everybody. What are we talking about today?
BNGO stock.
Oh, love it, man.
The hate stock, the hype stock that I got.
This thing is the future.
Dude, I haven't put it up yet. I'm sure I'll get a lot of hate. I don't even really insult the guy, but I go through and I'm like, all of it's invest with Henry. And I go, everything that he's saying about the science here, do you think this bro sitting here actually understands the science behind it? And it's like, because that was one of the main things that they did is they said, well, Kathy Woods bought the stock. Okay, but Kathy Woods has a degree in economics and not medicine. And even if you had a degree in medicine, that doesn't mean you understand the science of whatever this crap company is doing. And it diluted its shares.
Yeah,
sorry, go ahead.
So, like with this genomics company, right? Like, how many genomics companies are there out there? Why is this one the one everyone's talking about? Just because it had a random run up out of nowhere because they hired some new guy or whatever?
Yeah, it's been up like over 1,000% the last year, and it recently IPO'd, I think. So, whenever anybody sees a big run up, they automatically think it's a great stock. I think that's kind of the foundation of why there's so much, zealous, belief in this one company. I mean, just look at the comments on my video, like all the hate and, oh, you don't know anything and you're stupid.
Yeah, it's insane. Like, so I'm looking at them now. They were 50 cents in December of 2020. They went up to about 13 in February, so mid-February. And now they're down to about 7.5.
Yeah, it's a highly volatile stock, and I don't know what they're working on. I just look at the financials. That's all I look at, And
they're working on. The guy was going over whatever the technology is. He doesn't understand the technology any more than I do, and it's like, okay, but how do you know? Because it is a technology that Johnson & Johnson isn't going to release a machine that does it better tomorrow. Like,
there's no logic, dude. It's people just find a stock and they buy into a story, Wall Street or the news or somebody's telling them a story. And once they believe that story, they're not going to listen to any contrary evidence. It's the same thing with NIO. Oh, it's the Tesla of China. And that's all they know. And that's why they keep showing.
Did you see, so I was using, you put up that NIO video or NEO or whatever it is. And then I commented on it, and then some guy just posted this long ass reply. And he actually has done his research, right? Which is good because most of these neo investors, they aren't doing their research, and he actually has a pretty strong conviction of why he thinks it's a good investment, even at its valuation now. So it's like, okay, I mean, that's good news, and like super long replies, like tons of detail and everything, and. Basically there's just this whole clash of, someone who's a value-oriented investor versus someone who's a growth-oriented investor. Because this guy said he had like 30% of his portfolio or something like that in NIO, or NEO or whatever. And
it's NIO.
Like if you're convinced that it's a good investment, then I guess you can't really argue against it, because if someone's that invested in the company, they're not really going to listen to you, right? Like they might say they will, but it's going to be hard for them if they have like hundreds of thousands of dollars in this one company. Like, how can you really convince them that it's a bad investment? They're not going to listen to you.
I mean, it's all about probabilities is what they don't understand. I mean, yeah, it may become a big company in China in the next 10, 20 years. It's possible, but there's also a very distinct possibility that it completely goes out of business. Which is why we always say, don't speculate with a huge part of your portfolio. And just looking at the financials, I mean, it's not profitable. I mean, now, I don't think it's a good time to buy it.
And I don't trust a lot of Chinese accounting practices.
Yeah, that's another thing.
Up and up a lot of times. But it's like, This is something I'll say to somebody. I don't buy NIO. NIO stock shoots up to $1,000 a share. How much money did I lose?
Nothing.
NIO, I put $500 in NIO and the company goes out of business. How much money did I lose? See, it's like that's all. It's just FOMO. It's like your fear of missing out is ultimately going to cost you more money in the long run, and you are going to pick losers. I don't understand why everybody seems to think that every stock they pick is going to the moon.
That's just the nature of the market right now. The whole thing is just stupid. And it's also the nature of YouTube because there's so much propaganda and it's all focused on a certain small portion of the stock market. It's all the same stocks. So I wouldn't be surprised if the reason a lot of these stocks are advancing is literally mostly because of YouTube and the financial news.
Dude, I got a comment from a guy in Africa who was saying I was spot on Tesla. He's like, them saying that we're going to have electric vehicles. He's like, we're not even going to be completely electrified by 2030. And he was commenting on Meet Kevin. And he goes, I unsubscribed to this guy because of that video. And I'm like, yeah, he's a moron.
Like that guy's a complete clown. I mean, we've talked so much about Tesla. I think a lot of people are shifting to new stocks now. I've noticed not many people seem to be talking about Tesla. And that's because it hasn't really gone up a lot recently. That's why nobody's talking about it. It's actually kind of flatlined almost.
Yeah, well, wait till they realize that it's not going to $3,000 a share and they start selling. That's when I'm going to laugh at Kathy Woods too, when her ARK funds implode.
Well, it kind of has, right? Isn't it down this year?
Well, I mean, that could be just reversion.
Yeah, I mean, yeah. I'm not confident about the long-term viability of ARK funds. I mean, she's all hype. She's all about fund flows. She's all about the story. I mean, she just got into a really good place where she was able to capitalize on a bunch of new and exciting stories. So we'll see what happens, but I'm not putting any money in ARK.
Well, it's also like beware the funds when you start to get a star manager.
Yeah, it's literally like whenever I see any star managers, all the YouTubers pumping the same stocks, to me that's an automatic warning sign that there's something very, very wrong with those stocks. I mean, the more people talk about it, the more probable it is that those stocks are just being driven by hype. And it's that everybody thinks that just these stocks are just the ticket to infinite wealth. It's going to solve all your problems if you buy AMC.
Well, I did. I had a dude. I had to stop arguing with him because he was like, 25% is doable. And I go, per year. I'm like, it's within the realm of mathematical possibility. Maybe if you use the magic formula and you're disciplined and you stick to it. But I have no confidence that a dude that just started investing last year is going to all of a sudden go on to get 25% returns for the rest of their life.
It takes years to really get good at investing. I mean, you have to have an accounting background. You have to have finance. You have to understand economics. You actually have to live through bull and bear markets. I mean, even we haven't experienced a crazy bear market, or at least I haven't. I mean, you probably have, Jay, but it takes a long time to really get good, which is why all these people are just new kids on the block that think they're all geniuses because they got lucky with one stock pick.
Yeah, I mean, you posted that thing from the Boglehead forums where they said what are we expecting about a 5.5% return for the next decade at least, and that more of the growth will be outside the United States.
Yeah, so Vanguard, I guess they release studies. They look a decade out in the future, and their projected returns are actually much higher for ex-US, like international stocks, than U.S. stocks, which makes sense.
Yeah.
I mean, look at the massive run-up.
Well, it's just going to go like this. It's going to stay flat as the company's earnings catch up to their value, and then it'll run up again. And I don't know. I can't wait for it to happen so I can stop hearing stupid shit about like these bro YouTubers. where it's like, dude, I can tell you're emotionally invested in this guy for this reason. I'm a huge fan of Rogan's podcast. I listen to his clips. People say negative stuff about Rogan all the time. You know how much time out of my day I take to defend him? None. But it's like all of a sudden I'm in a running debate with a guy. Name one stock Jeremy failed on. GoPro.
Bro, he's got a 100% win rate. I saw a video right before I went into this that apparently somebody's claiming he's being investigated for by the SEC for pump and dump frauds, which if that's true, that would be freaking hilarious. Actually, I need to go find that video after we finish this.
Well, isn't that all of YouTube?
Yeah, I don't know how these people next bear market. I don't know how they're not going to get sued. I mean,
what I say? I say I don't care. Like, take this as financial advice or don't, because my advice is solid. Put your money in low-cost index funds.
Yeah, but Jay, you're not going to be rich until you're 70, bro. I mean, we don't have any money, man. We're just broke losers.
I disagree on this premise. I live in one of the greatest countries in the world, and I could go in and take shit on my boss's desk and tender my resignation tomorrow, and I'll be just fine. I am rich. I live better than the King of England did 100 years ago by a wide margin. I'm sitting in my air-conditioned house talking to friends on a computer, and I can literally go to the store, go to Walmart across the street, and buy any kind of food that I want to buy.
Yeah, but you could be even richer if you bought Nio and Bionano Genomics. I mean, come on, man. You're settling for mediocrity.
But it wouldn't surprise me that if he is getting investigated, because I actually called one of the guys out in one of the higher ups in Nevada about that dude. I was like, isn't it illegal for a guy to be telling people to buy stocks that doesn't have the proper certifications? And he said it can be. I go, well, I just want to give you this guy's name out in Las Vegas. Because you could get, I'm pretty sure you could get him on that fucking $20,000 court Discord he has.
Yeah, I remember when I was a financial advisor, I remember there's something like, I don't know if you can't take money for advice or something. There's something, there's a really tight rule there. And if you break that rule, I mean, that kind of opens you up. You have to be licensed at a certain point. But I forgot exactly what the rule is.
Well, there are going to be a lot of people that lose a tremendous amount of money thanks to this guy. And I can tell that they don't know what they're talking about, too, when they say, well, he had a 70% return over the past year. I go, okay, well, I had a 75% return in my M1 Finance account on one portfolio I picked. And I have zero confidence that it's going to get 70% next year.
You don't know that for sure, Jay. Maybe we're in a new era, They've only ever said that, once or twice every century. But this time it might be different.
This time it is different, man.
You're right.
It's 2021,
bro. It's the future.
Yeah, there's a book on that, right? It's called This Time It's Different. And it's about like market bubbles throughout the human history.
Well, dude, if you want to know how irrational the bubble in crypto is, I'm like, go back and look at the bubble in bicycle companies in the 1890s in England. And like now it's so easy to look back on that and laugh at it and how ridiculous it is. But like at the time, the three of us would have been burned at the stake as witches for saying like, dude, don't put your money in that bicycle company.
I mean, imagine having the fortitude to stay out of tech stocks in the late 90s. Like, imagine everybody else is just making a killing, but you have the strength to resist, which is kind of like how I feel now. It's like, oh, everybody's making so much money, but you have to stay strong because that's ultimately how you win. Because they always pop. They always pop.
But here's the thing about the late 90s and why it's harder to see the bubble today. When you went back and you looked at like pretty much all those tech companies, if you would have just looked at their financials, you would have seen that they were all negative, all their free cash flow.
Yeah.
That's what I show about that invest with Henry and that BGNO stock. I'm like, the same thing you pointed out. I'm like, it has negative cash flows, and the negative cash flows are increasing.
It's highly speculative, but no, you know, out of all the people that commented on my YouTube video, I bet you not a single one watched up to the point where I went into the statement of cash flows, nor have they ever looked at the 10K. I mean, I'm just going off the numbers, the audited financial statements, ladies and gentlemen. But I guess I'm not doing my due diligence.
Chris, on your total, like out of all your videos, do you have more dislikes or more likes on all your videos combined?
So I think I'm still in the positive, but I think that's going to change. I might have the world record eventually for the most hate on any YouTube channel, but I'm okay with that. You know,
it's still engagement.
That's what I'm saying. It's like, okay, you can hate me, but my subscribers keep going up, so that's fine with me.
Dude, that's like when the guy commented on, he's like, "Oh, you probably did this. You did this video on Meet Kevin for the likes. That backfired on you." I'm like, "Yeah, dude. I went ahead and attacked one of the largest YouTubers, followed by a bunch of retards, and expected that I was going to get a whole lot of likes out of the situation." Like, wow, I couldn't anticipate the hate that you were about to deliver to me in the least.
Yeah, you got to be prepared. If you talk about any stock and you look in the financial statements, you know, those stupid, boring things. If you do any research into that, you're going to get attacked. So you just got to be careful.
I mean, if you must buy stocks, why not just use this proven method in this book?
Yeah, but was that published in 2021, Jay?
Like,
no, it's outdated,
man. It was the early 2000s.
Look, they're going to release a new edition. It's just going to be like, just buy Tesla on every page, just over and over.
Yeah. I got questions. The more this Tesla thing goes on, the more questions I have about Elon Musk too.
Some people think he's a fraudster. I mean, I don't think he's definitely a weirdo. And he does stupid things.
Towing the line, man, with this crypto shit.
Yeah, I don't know what his game is, but like I said, my theory is that he's just having fun. You know, he loves the rush of moving markets.
You know who doesn't like that? The federal government. You know.
Yeah, there's going to be a crackdown. I think there's going to be this purge of YouTubers. It may take years and years and years, but all these clowns talking about the same stocks that are ultimately going to tank. I don't know, man.
That's why we just establish our record by just calling these companies straight garbage right out of the gate, get all that hate. Then eventually they're like, wait, these guys just consistently call that these companies are hot garbage.
I mean, it's not hard. Open the financial statements, look at the profitability, look at the cash flows, and you have a pretty good idea of how the company's doing. Growth.
Yeah, growth's about to get crushed. I read an article today where the guy's saying the Fed's probably going to raise interest rates and start tapering by the end of the year.
Please do, because I bought a speculative put on interest rates, so I really hope they go up.
Wait, really?
Yeah, I bought I put a couple $100 in a put on long-term treasuries because like I've never bought options before. I'm just curious how the mechanics work. So I mean, worst case, I lose a couple $100.
Yeah, that's what Michael Burry did, right?
Yeah, he's smart because like the longer the treasury, the longer out the longer the duration, the more sensitive it is to interest rates. So even a 1% or 2% increase, I mean that fund is going to take.
Yeah, his bet was pretty insane. It was like I didn't even know he had like a triple like short 10-year treasury, like triple leveraged ETF that he was like so he was buying that, and then there was like a double leveraged ETF that he was buying, and he was like selling puts on like, you know, the non-short one, like the actual like bond fund. I was like, man, I didn't even know these ETFs existed. Like a triple leveraged short ETF on 10-year treasuries. I mean, I guess it makes sense, but like, man, that seems pretty niche to me.
Yeah, I know what you're talking about. That is a pretty crazy bet. I mean, yeah, I bought a put too, but I'm not putting my money in triple leverage or betting against triple leveraged inverse interest rate ETFs.
Inverse pancake ratios.
Yeah.
Inverse pancake ratio.
Dude, I also read another article that they said we're at the height of the bubble because they said margin debt. They gave the number, but they said every time that right before the Great Depression, all the past bubbles, the margin debt rises to a certain level, and that it's approaching that right now.
I mean, just looking at the CAPE ratio, it's insane how expensive US is. That's why I had like
37?
money. Yeah, it's like 37, 38. I recently invested. I put it all in VXUS. I'm not touching the US. I mean, obviously it's in VT. I have US and VT, but I'm not going all in on the US stock market, at least not now.
No, but my hope is that the market crashes. If I could engineer a crash tomorrow, I would. If I could go scream about super COVID, like super COVID is coming, the end is nigh. Sell me your stocks.
I mean, if super COVID happened, I'd probably sell my stocks. I mean, we've talked about this before, but if there's like a 20, 30% death rate, you might want to sell your stocks, because then you're actually going to, dude, 20, 30%. You're
already screwed. You're in the fucking apocalypse. You better buy and let.
You sell them all and you go stock up on like rice, canned beans, and guns, Yeah. You might as well use the money while you have it.
Yeah, if it was coming, I'd be like, well, I'm gonna go get that Henry lever action rifle I wanted in 357 because if I'm going out in the apocalypse, I'm going out in style.
I'm getting the Cybertruck if that happens because it's apparently it's like bulletproof, and then I'll probably get a minigun and I'll mount it on the back. Got to survive, man. Do what you got to do.
That'd be pretty cool.
Yeah, dude, it's insane, man. I don't even know what to say. It's like even Scribner seems like the voice of reason. Ryan Scribner seems like the voice of reason in this market where he's like, guys, like he says in his book, when everybody looks like a genius, that's when you're in a bubble.
Yeah, I mean, even Jeremy's starting to seem more reasonable. I mean, he's been talking about, don't do options or you're not going to get rich super quick. I mean, he does tell people to, to invest in stupid stocks, but at the end of the day, he sounds a lot more reasonable than these clowns that just show their iPhone and their Robinhood portfolio with AMC and Neo every freaking day.
Well, yeah, that is another reason why Meet Kevin is the worst of them because he keeps doing the AMC thing for likes. And I'm like, dude, you have a large subscriber base and you have a duty to these people. They're looking at you for actual financial advice and they think you actually know what you're talking about when you don't. Like, to project a company is going to continue its massive growth for another 10 years without actually cutting into your projections is just the most ridiculous. Oh, Tesla's going to grow by 50% for the next 10 years and it'll be the entire world market. And so
AMC 100,000.
Yeah.
Bigger than the entire US market by itself. Come on, bro.
Yeah, man.
Whatever. It's stupid, but we just have to have patience. I mean, it's going to take a while for things to sort out. I mean, you can't say you're right because people are so short-term oriented. All they care about is if the stock went up, in the last couple of days. So
when I'm buying, when I find a company and I start buying like stock, even though it's still a small portion, I start to get mad if it starts rising really quick. I'm like, wait, I found this thing, man. Let me load up on it before you go to the moon.
Yeah, I kind of like whenever I try and like establish a new position in something, I go into it with the mindset that this thing is gonna immediately go down as soon as I buy it. Like I'm gonna be in the red for like the next week, the next month, just because happiness equals expectations minus reality.
Yeah.
Tell me about Baba, bro. I haven't made a cent off.
Dude, I'm down like $100 on Baba. I'm just sitting here like, okay.
Yeah, I'm down like 5-6%, but I mean, we'll talk in 10 years if you're watching. You think that's a bad return? We'll talk.
Well, I watched a video. There's this dude out there. I did a video on him because this dude is awesome. He actually does discounted cash flows and all that, and I'm of course not going to sit around doing that stuff on a Saturday. But he projected Baba at around 1,000 with two different methods. I forget what they were by 2030, which seems reasonable to me.
Yeah. What's the main hangup everyone has with Baba? Like, why? Because everyone's saying they're undervalued, right? And like they have all this growth potential, but they're just like it's going down still, right?
Yeah, it's because there's anxiety over everything that happened with Jack Ma, especially since China can be a touchy place to invest to begin with. You got the risk of like of something going on between China and America, where I don't think it'll happen. But Biden goes, okay, no, Americans can't buy Chinese stocks anymore. That isn't delisting is an actual reality.
That would be insane if that actually happened. I mean, I could see them doing that maybe for like certain stocks that are like strategically opposed to us, or they don't want Americans investing in certain stocks, but all stocks, like that would be freaking nuts to me. But it is a risk.
I don't think it'll happen though. I think the odds of that happening are like the odds of a 35-year-old Jennifer Aniston walking through the door right now and wanting to bang.
Turn around, bro. Oh my God, there she is.
Oh, dude, in the breakup, she looks so hot in the breakup. It's ridiculous, dude.
Jennifer Aniston. I'm not a huge fan of her. She's okay.
Dude, in the breakup, she's one of the sexiest women that's ever lived.
Yeah. I'll check on that. I'll get back to you. Maybe we should, instead of talking about stocks, let's just live stream that movie and just commentate on her. How about that?
Dude, we should live stream that Invest with Henry guy.
I mean, we can go check him out in a little bit. I don't know how good the quality is going to be.
All right, we'll check him out because this dude, he's got 116,000 subscribers. So I'm thinking about just doing videos where I go, AMC, more hot garbage. Just keep calling all these meme stocks hot garbage.
All right, let's go check out this clown real quick. What's his name? Invest with Henry?
Yeah, Invest with Henry. BNGO, see that?
26-year-old entrepreneur, retired options trader. That's cool. Oh, look what he's talking about. The two stocks that I just dumped on, Neo and BNGO, he's talking about.
Yeah, dude.
Let's watch 1 minute of his crap.
Insurance providers can give you a quote online.
Can y'all hear the audio?
Let's jump right into it.
Yeah.
BNGO stock. BNGO is up over 65% in the last month alone.
Oh, it's up.
This stock has had a lot of volatility. It has been over $10 per share, and then it had a major crack.
See, guys, this is how you know a stock's good. If you see a massive run up like this, that is totally 100% sustainable, okay?
Oh, he points that out. We probably won't see a 16 times return. I'm like, okay, dude.
Probably 12 times, but not 16. Hold on, let me download his video. Oh, there we go.
Actually, it went below $5 per share. I've pretty much been looking at that stock like I was looking at my car that had a scratch on the door, because under $5 per share is an absolute steal, and it felt really bad.
Wait, pause it right there. Why is it an absolute steal at under $5? This is like, I say this in my video. I go, what about this makes it a steal at $5? Just because
he did a discounted cash flow analysis of all the money they're losing.
Wait, is he talking about options here, or is he talking about like just straight up?
No, he talks about straight buying the stock.
I kept telling myself, Henry.
It's probably like a technical analysis thing where he, like, oh, the stock was at this level and there's a support. So that's probably what he's looking at. He's not looking at it from a fundamental thing perspective, I don't think.
Well, yeah, I mean, you can't. Like, it has to just, like, that's what people do with these biotechs, right? They just day trade them.
Yeah, I mean, but I think this guy's saying going long, so we'll see.
Yeah, he's going long.
On genomics is very clear, and I've done my
Kathy Woods.
research on BNGO. The picture here is that BNGO should make a lot of money long-term if you're patient. And I have a lot of reasons for why.
In 20 years, it might be, it might have positive cash flow.
Wait, dude, you're going to like this. Just let this play for a second.
BNGO is likely to be successful, and patience pays dividends. BNGO has been very active, and it's been showing a lot of momentum recently, and I decided that I'm going to throw $5,000 at the stock.
Oh.
It's not $1 million, but hey, let me just tell you why I did that.
Dude, that's nothing.
BNGO have ramped up on Reddit investing forums in recent days.
They ramped up on Reddit, bro. That's a bullish sign.
60% of the company shares are sold short, despite BNGO's Sapphire system having very good results. Recently, researchers compared the use of Sapphire with other cytogenic analysis tests on a
Stop. Do you think this guy understands that word that just came out of his mouth, cytogenic process? Do you think he actually knows what he's talking about? Like,
look,
bro,
Jay, how big is your portfolio versus his? Okay,
probably not as big as his.
I don't want to hear it. It's all about how big your portfolio is. Are your teeth as straight as his teeth? I mean, look how shiny they are.
Oh, dude, not even close to that.
Well, then, Jay, why are you talking, bro? You don't know.
I don't know. I've been punched in the face before. That's probably why.
100 genetic
Oh, there it is. See, there's the science right there, bro.
Yeah, I know.
abnormalities. The result was 100% clinical concordance, meaning that the Sapphire system could identify the same mutations that other methods verified. For me, I believe we can see BNGO dramatically rise past $10 per share in Q3 and $15 by share by the end of the year if the company continues to show promise and deliver results.
What results? It's completely unprofitable, both on a accrual basis and a cash basis. Let's see what the 60x is.
A very short.
I wanted you to get to the part where he starts talking about Kathy Wood's analysis. I don't know where that is, dude.
Kevin O'Leary.
He uses a clip of Kevin O'Leary saying it's all about the cash flows in a video about a stock with negative cash flows.
Oh, we got an ad coming up.
All of Wall Street is pretty much like Mr. Wonderful.
With Fundrise, you can invest here from there.
Kevin O'Leary's outdated, man. I mean, he wants cash flows.
Just say no.
You hear that, ladies and gentlemen? If it has no cash flow, just say no. But I guess we're boomers, you know.
Either the company makes cash or it's debt to me or, it's debt to the investor. No cash, no liking the stock. It's simple as that. Because if there's no cash flow, you can't get stupid rich. If BNGO has this relationship, they're going to reap in a lot of profits. And it's only a matter of time until people take a look at the income statement and they're going to see the revenue, the operating cash flow.
All right, we got to pull up this income statement right
Dude, I'm looking at their income statement right now. I mean, they have thousands of dollars in revenue.
Oh, my God.
We're talking thousands.
All right, now I'm going to prove this clown wrong right freaking now.
See why I wanted you to watch this video, dude?
See, they're just gonna go on his word, Just look at the income statement, bro. Well, Inspector Bell is gonna check this out right now. Okay, let's see. All right, so the revenue has increased significantly. Oh, no, this is the balance sheet. My bad. There's Cat. Where the hell is the income statement?
I went on Yahoo and bought it.
All right, so here's this amazing income statement. So they had revenues of $10 million in 2019, and it dropped to $8.5 million in 2020. They had an operating loss in 2019 of $25 million, and they had an operating loss of $38 million the next year. Total net loss last year, $41 million. And on top of that, look at the share dilution.
Yep, dude, that was
gone up by 10 times.
More than that if you go back to 2017 or whatever it was.
Oh, yeah, because they only have the last 2 years. You'd have to look at another 10.
Yeah.
But look at the cash flows from operations. Where is it?
Dude, it's a science project.
Yeah, look, net cash used in operations, negative $30 million in 2019, negative $38 million in 2020. This guy's not looking at the income.
Here, go to never mind. I was going to say go to the financing section. Because it's probably just a bunch of share issuances, right?
It is. That's how they're getting their money.
Yeah, because like you saw the cash increase significantly. So if you see a new company and then you see the cash balance increase, it's probably because of freaking debt or share issuances. Where's the 10K? Jesus. Are they trying to hide their 10K from me? Are they scared of me? See, but all those Robinhood guys say I'm not doing my due diligence. I'm just an idiot. All right. Cash flows from financing activities. So they paid some. Okay, here it is. Proceeds from sale of common stock, $40 million.
Yeah, and that's the only thing that's positive on that whole balance sheet or financial statement.
Yeah, then look, proceeds from warrant and option exercises. That's more dilution, $28 million. So basically, almost all of the $61 million of net cash provided by financing is from stock issuances. Like, oh my God. And they took a PPP loan. How cute is that?
But dude, see, that's with that guy, I'm sitting there and I'm like, what are you talking about? Like, I was baffled because I was looking, when I watched the video, I went right to Yahoo Finance. I actually downloaded their 10K and I was going to go through it when I got a chance. But I'm like, I'm looking right here. It's losing more money every year. I'm looking right at the income statement. What are you talking about?
I mean, if anybody's watching this and you listen to that guy and then you literally I literally looked at the financial statements. If you don't see how much of a fraud these kind of, how big of frauds these people are, then you're freaking nuts. I mean, it's just obvious to me.
Well, that's the problem, man, is because people don't want to do the work. You know what I mean?
See how much work I did there, ladies and gentlemen? It took like 3 minutes.
Well, it's like the guy who said he can comfortably get a 25% return every year. You think he owns this book? Think he's read any books on this subject? Do you think? I want to ask, like, do you even have like because I have the basic ability to read the accounting statements. A basic one, a basic understanding of it. And my basic understanding of it is telling me that BNGO is hot trash.
Yeah, I say in every video, at least wait till you see like consistent operating cash flow that's positive profitability, stable margins or even improving margins. Okay, then you can consider the stock. But even then, even if the cash flows are growing, like if you look at Apple, I'm sure their operating cash flows are growing, but that doesn't mean that it's a good time to buy right now. So the first thing you do is look at the statements. If it looks attractive, then you go and look at the price of the company and compare that to its future cash flows, which is a guess. And then maybe you can buy the stock.
Well, Peter Lynch points this out. He goes, if you look at Walmart, from the time that it IPO'd, you had 10 years to get in on it before it took off. It's a time game. If you like a new company, by all means, keep track of it. But if it's not producing, like, did you poured through Tesla's financials, or did you even just not bother because it's just so massively overvalued?
Well, I mean, I looked at Tesla's financials, and they're in a better position than that stupid company.
Obviously, I know Tesla's a better company than that.
Yeah, I mean, Tesla. I mean, it's. I would, if I was looking at the financials, I would consider it. It's growing massively, but then you look at the price to buy those cash flows, and you're like, holy crap!
Yeah,
that's a point where I wouldn't do it.
Okay, because I mean, when I know something is massively overvalued in a bubble, I'm just not going to waste my time. I'm like,
you shouldn't, because like with BNGO, like you don't need to look at their financials in depth to understand like what's going on there, right? And there's so many companies that are like that. Like you need to have a screening process. Like if you're going to go the route of picking individual stocks, you need to have a screening process. And like for me, that would usually start by looking at the PE, right? So if I see like 1,000 PE, I'm not looking at it. If I see a negative PE, then maybe like in the future, if I'm like more interested in speculative plays, then I could look at negative PEs. But now it's because so many company earnings got decimated last year, it's hard to kind of use that filter of just the PE because so many earnings are low now. right? Because you'll see a company that has like a 50 PE, and then you think, okay, overvalued, like just by common logic, but it's like, not really the case because they just had their earnings decimated by COVID, and things are going to turn around, and
Yeah, I mean, that's why
hopefully,
you can look at their finance. Like, you can go back 5 years and just see trends. Like, what was the cash flow from operations? What was the free cash flow? What was the net income? Is it growing? And then did they have one dip in 2020? Well, okay, that makes sense. You can almost like discount that year as long as they're going to survive.
What I look at, the two that I look at first, PE ratio and earnings per share. If the earnings per share if it's a high PE ratio and the earnings per share is negative, I'm out. I don't even care anymore at that point. I'm like, then if I'm going to do work on a stock, what I would do next is just use easy metrics, quick ratio, price to book. Then you can probably run PEG ratio on it. And I mean, if you're good in most of those areas, it's probably a good place to start now. And then you could probably get away with investing in companies if you stuck to probably 6 key ratios, and you'd be fine in looking at the balance sheets.
Yeah, you'd be better off in the long run. But I mean, what's happening right now is it's obvious nobody is looking at the financial. It's all about YouTube hype and just money following money. So, I mean, in the short term, it's going to be hard for people to understand what we're talking about, but we'll see in the next 5 years what happens.
For me, a good one really is PEG ratio. If the PEG ratio is under 1, I'm interested.
Yeah, I actually did buy. I put like $300 in this company called Lincoln Educational Services.
Yeah, you're telling me about that.
Yeah, I mean, I believe in the mission. I mean, it's not a crazy cash generator, but super low PE, super low PEG ratio. I was like, all right, we'll see what happens. I believe in the company. Cool.
is it because you're a tutor?
Here's why I like the company. It's because they only specialize in giving like useful degrees. So they're not going to have like history or art history. They have like trade, nursing crap. I think all practical degrees. I was like, wow, I really like this company. So whatever.
I personally think that we should, in order to pay back student debt, we should open up the universities to liability lawsuits.
What we should do is have that people have this idea that instead of loaning people money, you basically buy equity in their future earnings. So it's kind of like a stock issuance where they pay for your school and then you owe a certain percentage of your income in the future instead of having debt. So I mean, with that, it'd be more high risk, but you could also get high returns if you invested in students that were getting like tech degrees,
Yeah, but that's kind of a weird thing, like, investing in a person and then you take like a percentage of their money.
I mean, you still are, even with debt, you're still taking a percentage of their money.
Either way, in that system, you're still a slave for a while.
Yeah, but at the end of the I don't think they can. You're not going to be in debt for life. Like if you don't pan out, they just lose their money. But the student isn't indebted forever.
Well, personally, I told you what my solution is. We're going to reset the clock, and we're going to do that by using universities' endowments. And then from here on out, you got to go to a bank and get a loan.
I mean, even the banks can be stupid too, but they'll probably be better than the federal government.
Yeah, I heard some crazy stat about the Harvard Endowment Fund that said with the size of their endowment fund, they could pay for all their students' tuition for the next, like, I can't remember the year, but it was some like over 100 years or something, because they have a massive endowment fund, right? Like it's like hundreds of billions.
$100 billion.
I would love to see what they're invested in. I mean, we could probably look that up.
Yeah, pull it up.
Like Neo, Tesla.
Well, and then I would say this is punishment for fucking letting Jeffrey Epstein run around up here with your scientists, seducing them with underage puss.
All right, I'll see if I can find this.
It should be public. It's an endowment, right?
It's sustainable investing. Ooh, it's sustainable.
Here we go. Wait.
Tell you what you can do with your sustainable investing too. I, as the investor, want the maximum return on my money. Get out of here.
Well, they have annual financial reports. I'm looking now.
Yeah, it should have like a pie chart, right?
Dude,
a lot of private stuff.
dude.
Yeah, I feel like operating expenses, blah, 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 blah. Oh, here we go. All right, let me share this.
The university hedge fund.
For the fiscal year ended June 30, 2020, the return was 7.3%.
Could have got that out of a wait.
Oh my God. Look at their public equity, private equity, hedge funds.
Wow.
Wow, that's wow.
Does it
Very
specify what?
What's up?
Does it specify like what the hedge funds actually hold, or is it just saying we have this much with hedge funds?
Maybe they have a breakdown or further down. I mean, it's just financial statements. They might not say what they're invested in.
Yeah, you know what's an interesting one to look at is the Norwegian Sovereign Oil Wealth Fund.
Aren't they like 100% VT or something like that? Oh wait a minute.
Where's the money invested?
I mean, it's not giving like specifically what stock.
No, I meant for the Norwegian oil fund.
Oh, so it's like it's basically like what we would like it's passive investing. It's like diversified index funds and that type of stuff. Like it's pretty interesting. And I don't know how their breakdown is in terms of like, you know, public or private. I don't know if they invest with hedge funds. I mean, I highly doubt it's like 20% with hedge funds or whatever the Harvard one was, but it's a lot of like, yeah, it's like, yeah, it's all about like they're all about sustainability and ETFs, I think.
Oh, look, this kind of sounds like VT. How the fund is invested. 9,000 companies.
73 countries. Yeah. Dude, it's basically they basically just create if they did it that way, they did it the whole world.
Sounds like VT, ladies and gentlemen. Equities, so they're 72% equities, 25% fixed income. Okay, I mean, whatever.
Yeah, okay. And they use the money they get from their oil reserves, and then they invest in it, right? So it's like an actual person, right? Because a person earns money from their work and they invest it. Like obviously this is way larger, but it's the same kind of philosophy.
Yeah, so this is sorted alphabetically, but it's probably like where's Apple?
Well, it's just like every company in the world here, right?
Yeah, it looks like VT to be honest. So, wow, what losers? What basic boring losers these people are. They're never gonna make any money.
What a bunch of basic bitches.
Yeah, man. I mean, all you gotta do is put all your money in Neo.
I think I'm going to switch over all of my U.S. growth fund into the total world market too.
Dude, I freaking got rid of my.
I'm keeping the REITs, dude, in the mid cap. I think you should have kept the REITs.
I'm just done. I just 100%, 95% VT. I'm done.
I mean, like obviously that's a good approach.
Yeah.
I mean, yeah, I'm not going to say you're going to underperform. I mean, like my portfolio actually outperformed the S&P 500 with VBR and VNQ by like 2-3%. But I don't know. It just gives me the jitters. It's like I feel like I'm too much in the United States, which is why I just said, screw it, I'll do BT.
I mean, yeah, I don't disagree with that. But I think that growth fund, 18% over the past decade, I think all that growth is reached its limits, so to say.
Yeah, America scares the crap out of me. I'm not going to sell my American stocks, but I'm definitely reducing it as a percentage of my portfolio. I mean, you can't go wrong with VT. I don't see how there's an argument against it, unless you want to get rich in like 5 seconds.
Yeah. Do you guys listen to Peter Schiff at all?
I do. He can be hyperbolic at times, but
yeah, it seems like everything he's talking, like he talks about inflation a lot, right? Because he's more of like on the economic side of investing rather than like, you know, the micro side. Let's look at individual companies. And it just seems like he's always talking about like how the government and the Fed is like screwing up the economy. And it's just such like doomsday type stuff. And I'm like, oh my God, this guy is just going on and on about all this stuff. And like, I mean, it's hard to really dispute what he says because he used a very like logical economic approach, right? Like more money printing equals inflation, which can be bad if it's too high, right?
Yeah.
I mean, some people think that as long as inflation is steady and you can, project it, you can kind of like plan for the future. But if inflation is just like rapidly changing over time, it's hard to like really plan for the future, which, stops businesses from really investing. So, I mean, I don't necessarily think some people agree or some people argue, and I actually kind of agree that as long as inflation is a stable percentage going forward, that's really what ultimately matters. But I mean, I'm not a genius economist. I don't know.
I mean, I'm not either, but I would argue that a 2 to 3% inflation rate is actually beneficial for the poor and middle class. I don't agree. Inflation is not a tax on poor people. Inflation's a tax on ignorant people. And I don't mean that they're dumb. I just mean that they're not educated. Because if you're a person and you're poor or middle class and you move into the home ownership group, right? Now you want inflation. You want to pay the bank back with money that's worth less than what you borrowed.
Yeah, I did a video. Like, if the inflation rate is higher than your mortgage interest rate, you're paying less for you're literally not paying interest. You're paying less for your home than the sales price in the long run.
Yeah.
So I hope there's inflation. It won't bother me. I have a lot of stocks and I have a fixed rate mortgage. So bring it on.
Yeah, inflation is bad if it runs up 15% every year like it was doing in the 1970s. That's terrible for you. But,
Well, because like then they'll have to jack up interest rates to really cool off the economy, and then that hurts stocks, I just don't see. It's crazy. There's so much debt now with the government. It's like if they jack up interest rates, how are they going to afford the interest payments?
Yeah, that's what Peter Schiff keeps saying is like, that's like they won't increase the interest rate because of the government debt. Now, like the problem with that is like the Fed and the U.S. government are supposed to be separate, right? Like they're not supposed to make decisions and consult each other on the decisions. So really, if they choose to increase rates, it shouldn't be because there's a lot of government debt. They should do it because that's what the economy needs, right?
But the problem is the Fed has become a politicized branch of government now, with all this talk of what is the Fed doing to fight inequity? Like, that's not the Fed's job. Sorry.
They're supposed to save the world, bro.
Yeah, it's yeah. I agree with Peter Schiff on what he's saying in an actual real world. But the thing is like the central banks around the world have kind of completely taken control of the economy and control it.
What I can't believe is why people are still buying bonds. I just can't for the life of me figure it out. It's like the debt keeps going up, interest rates stay the same, and they just keep buying those crappy bonds. I mean, the only thing I can think of is they just want short-term cash. But I don't know. It doesn't make sense.
No, dude. Like I said, the government would have to pay me 7% on a bond for me to buy it.
And even then, they could pay, oh, yeah, we'll pay you 7%, bro. And then they'll have like 10% inflation. Then you'll get screwed anyway. So you just don't know. Like, I don't know.
Yeah, dude. I can't figure out who the clowns are that are loaning Uncle Sam money. He's spending like a drunk sailor who just got off the boat. And then now Joe Biden's talking about a $6 trillion plan. Like, where are we getting the money for this?
People keep lending us money. Somebody's buying the bonds. I mean, I guess we can go reserve.
Jay, it doesn't matter because we control the printing press. Then why do I pay taxes? Why are you mad then that billionaires don't pay taxes? I thought deficits don't matter and we could just print money. Oh, and by the way, Jeff Bezos didn't pay any taxes because he didn't sell any stock. That's how that works.
That's why I always say, like, international is such a sexy investment right now because if you have inflation and the dollar depreciates, I mean, you're getting paid more dollars when they convert the foreign currency earnings to your earnings. So it's just international is just hot.
Canada,
that's why I wouldn't be surprised if it crushes in the next decade.
Well, dude, that's why I'm switching over to VYMI.
I mean, that's not a bad play. I mean,
what's VYMI?
Vanguard International Value, or Vanguard International High Dividend payers. So it's like a value play. And that's top 10 holdings. None of it is in the United States. And that's what drew me to it. I was like, I need more international exposure because this just doesn't make sense to me.
No, what you guys need is Canadian bank stocks, man.
Dude, I've been looking for bank stocks. I told you last time I was looking at a few Canadian bank stocks a while ago.
Dude, they never go down. It's a slow and steady rise to the moon, man.
Yeah, in like 1,000 years, bro. I want to get rich next month. What kind of loser advice is this?
That was the best comment ever on my page. Out of all the hate was, some people don't want to be rich by 70, bro. Like, okay, well,
I literally got that comment today. Somebody literally told me he put his money in some like vaccine company. He's like, bro, I'm up like 600%, bro, and I'm gonna be rich. And you should read the comment. He said some really weird things, like about eating meat and salivating. It was a very odd comment. Maybe I could bring it up, but I was like, dude, I mean,
let's go through some of your comments.
Yeah, let's do that.
Dude, let's do it. Let's do it. I think
that'd be fun.
There's one I have to read to you guys, though.
You want to go to yours first?
Just one.
So your I saw your video kind of blew up, eh?
Yeah, dude. It's like more than I could ever imagine.
Yeah, just a little bit. Only what, like 38,000 views? 38,000.
Yeah, dude, here you go. This guy, I love it. His name's Humphrey Linda.
Which video?
I live in Africa, South Africa. This technology is not built here. By 2030, we would be lucky. He put luck, but be lucky if we even solve our electricity before we even think of Tesla. LOL, thank you for this. And he said, thank you for this. I unsubscribed. Meet Kevin, dumbass.
One person at a time. Hey, by the way, who is this guy?
Who?
The guy in the orange.
Oh, I just found him. I found him on YOLOing, and now I just use him because I think
he's just some random dude.
Yeah.
All right. You want to see some of my hate comments? This is gonna be fun. Mom Genomics. All right, he was just more like, oh, genomics. Blah, 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 blah.
Is that just the same comment over and over again, or is it like replying?
He was just saying a bunch of crap.
Oh.
So he said, go to Fintel, check out institutional ownership. Vanguard invested in 9 million shares. Okay, you have to do that if you're an index fund. You buy everything.
Yeah, that's.
And then this guy says, oh, this all makes sense now. You own VT ETF. This tells me your testes haven't dropped yet. Come back when you have the balls to invest. This is just literally a joke. All the bears in shorts will be laughed at.
Yeah, it's just all like growth potential, right? Like that's what it is with these companies, is people saying like, and whenever I hear someone go on, like as soon as I see a long reply and it's like by 2023 it's projected this, I'm like, okay, I'm not reading this. Like I get it, it's gonna grow. But what price are you willing to pay for that growth?
How many people do you think off the top of their head, if I asked them what does CRISPR stand for, they could go clustered regularly interspace palindromic repeats off the top of their head?
Hey, as long as you know what that means.
I did a presentation on CRISPR in 2016. I listened. I remember the woman's name. Jennifer Doudna is the person who found the zinc scissors that they use in CRISPR. Okay, so when I'm telling you, when I'm talking about genomics and stuff like that, and people tell me I don't know what I'm talking about. I'm like, this is one of those things where it always ends up at the end of the conversation where it's clear that I know what I'm talking about. You don't. Like this technology, I'm gonna make a call on this, and you guys can come back to it in 15 years, whether I'm dead or alive. You will not see CRISPR and all of this stuff reach critical mass till at least the 2030s. That's how all technology works. The first email was sent in 1971. It was another 20 something years before, we started seeing mass adoption. CRISPR was created in 2011 or 2012.
Yeah, but wasn't there like a tech bubble or something?
Yeah.
20 years after the first email.
Yeah, right? So it's like when you want to see the payoffs for CRISPR and all this stuff, look at the early 2030s.
By the way, look at that like to dislike ratio. What do you think about that?
It's engagement. That's all I see.
Where's the comments? Come on.
You got to click comments up there. Oh, there it is.
This is just literally BNGO is just starting as an amazing long hold. Oh, we already did that one.
Yeah, I mean, that's the thing. Like, was it amazing long hold at 70 cents 6 months ago? Because I hope you were saying that back then.
Bro, this is clickbait. Absolute nonsense. I said, yeah, reading the 10K is nonsense.
That is the best thing that could possibly be said that like just illustrates it. Bro,
what an absolute clown. You know you love me. Someone paid. This is one of my favorite. They always think somebody's paying me to talk about these stocks. Yeah, bro. Somebody totally paid me. Diamond hands. See, this is like one of the most convincing arguments right here. You have diamond, you have hands, a diamond, an ape, and another diamond.
Yeah, that argument pretty much sells me right there.
I mean, you can't argue with it, right? There's nothing you can say that could possibly change that person's mind.
Looking at financial statements makes you an idiot, bro. Oh, here's another one. Virgin. I'm a virgin, everybody.
I have a kid on the way.
Yeah, that's all the fun hate I got, but I really enjoy it. Like I think it's freaking hilarious how these people, their counter arguments are just stupid.
Dude, you got called clickbait for reading a company's financials, which is what they're probably just gagging on Jeremy's cock about him. I read the 10Ks. You read the 10Ks, clickbait. Like, it's great.
And that's what Jeremy's selling. Like,
oh, you muted yourself.
What happened?
He muted himself.
I don't know why. Why do you do that?
He doesn't want to talk to us.
Oh, you unplugged the mic. Oh, okay. Yeah, dude, that's what Jeremy is selling, is teaching people to read a 10K report, which Chris just taught them for free.
Yeah, I mean, it's not hard to read those things. Like, you just have to know what, like, that's what my latest video was on, is just like how to do it efficiently. Like, it's not really that hard. You don't need a background in accounting, right? Because it's just like a lot of it is technical jargon, which maybe you don't need to read. And it's not like you're trying to like investigate the company for fraud. Like, you don't need to go line by line and analyze everything. You just need to look at a few select things, get a general sense of what the risks are, what they're planning to do in the future, their comments on their past results as well. And then that's all you need, really.
And just look at their free cash flows, the shares outstanding. And then, ask yourself a question. Okay, why did they take on debt? Oh, they're investing in a new plant. Is in the case of Amazon for years. I mean, I haven't looked at their financials going back years, but I'm sure at a certain point that's what was going on. So it's like, and I mean, I don't understand. I don't understand the strategy of holding a bunch of stocks. You can't keep track of them.
Yeah, and that's the thing. Like, because if you have like 30 odd holdings, I mean, like keeping up to date with all that stuff is a ton of work. Like even if you only have 5, because every quarter they're releasing results, and you don't have to like analyze all of them, but you do need to like get a general sense of how they're doing, right? Because like each quarter when there's results that are coming out, you know that their price is going to fluctuate based on those results. But if you don't care, you're just holding long term, then maybe you could get away with not looking at it. But I mean, you just don't know because something could happen with a company, right? That's the problem with having things tied up.
Hey, can y'all hear me?
Yeah.
Yeah.
I don't know what's wrong with my camera, but
Huh?
I don't know what's wrong with my camera, but
Oh, your camera went out too?
yeah, I unplugged them both to try to fix this crap, but my camera, guys.
But no, here's the best question. There it is. Here's if you Warren Buffett said this. If you were going to go to a desert island for 20 years, are you comfortable with your portfolio? Because I'm fine with it.
100% BNGO, yes, 100%.
100% BNGO, and you come back and you're a trillionaire. We found the world's first trillionaire, and he was a guy who YOLO'd and diamond-handed BNGO.
Well, that'd be an amazing YouTube video. We found the world's first trillionaire. He was lost in a desert for years.
You see me like you see a helicopter find me in the desert. I have this massive beard. It's like, oh help!
You're skinny and gaunt because you've just been eating crabs that you dug out of the ocean.
They're like, Chris, how did you become so rich? I was like, yeah, I saw this comment on a BNGO video, and it had an ape, a pair of hands, and 2 diamonds, and I decided to go all in on the stock.
Dude, that's all you need to do. But I mean, I was total U.S. market till Chris talked me into total world, and I was like, that makes more sense to me, honestly.
Yeah, there's and like my buddy was on our live stream last time. He was sending us messages. He told us about J.L. Collins. Apparently, he's the guy that wrote like the Simple Path to Wealth. And I looked at his stuff. I think he only encourages people to do U.S., which I don't agree with. So I don't really hear anybody talking about total world except maybe on the Bogleheads forum and the subreddit.
Dude, it's the best economy in the world.
The world economy is the best economy in the world. I like it.
Just buy it at any price, bro. It doesn't matter what the cyclically adjusted price to earnings ratio is. Just buy US, bro. That's all you got to do.
Dude, this is how, like, I know I'm confident in Baba, but it's like, the whole buying at a good price. Right now, if I didn't have it at where I have it in my portfolio, I would be more overweight, but like I am now, but I'm just not buying it because I'm like, this is the largest amount that I wanted to take up in my portfolio. And if it really does start rising, I'll actually start trimming it, taking profits.
Yeah, I have 1.6% of my portfolio in Baba. I just did the math. Am I overly exposed, Jay?
I don't think so. I think you should be 100% in BNGO, though. Maybe.
I know. I was this close. I mean, I would say maybe 70%. 100% is like really extreme, but
yeah,
70 seems more reasonable.
And then just go like 30% in NIO.
That you gotta wait for the dip, bro. Actually, I think Chris Sane has like price targets on his videos. He's like, wait till it goes to like 37, bro, and then you can just like buy more shares. And his thing is he tells everybody to get 125 shares of every stock that he pumps, which I don't know why it has to be 125 shares.
That makes no sense. That makes no sense.
I don't
know. That's not how you weight a portfolwhy Hey, do you think he would even understand underweight or overweight if we started asking him? That's why I wanted to I was thinking about paying him $100 to get him on the phone and record it, and then just start like acting like I'm really dumb, and then just go, well, I got this buddy. He tells me that I should be invested in the total world stock market, something called a Boglehead or something. You ever heard of that?
I can't wait till if he ever talks about Berkshire Hathaway. He's like, yeah, you need 125 shares of Berkshire Hathaway. would that be like $1 million something dollars? Or no, way more than that, like $20-30 million. You need 125 shares, bro.
You're talking at $400,000 a share.
Oh, you probably need like $50 million.
You'd need like 400 million. You'd have like $400 million in it.
125 shares, bro. That's
125 shares, Berkshire Class A.
God, I always wonder, how did these guys get so big? What is the secret sauce?
Yeah,
to a massive channel being so dumb.
That's kind of what baffles me, because like when I see some of these guys like Stock Mo, and I didn't look at the guy you were talking about that much, but I just don't understand it. I'm like, what's the appeal here? Like, they're not talking about anything that's different than hundreds of other YouTubers are talking about. They're not like overly charismatic or like that entertaining. Like, what is it?
Yeah,
Chris,
I
I admit my mistake. You were right. It's $50 million. It didn't sound right to me. So I
pulled up my calculator. That's how I got it.
Yeah, but no, I'm with you on that, man. I don't understand it. I'm like, these guys couldn't. I don't think these guys could make anybody laugh outside of their circle of people that watch their YouTube. Stockmo doesn't even seem like he has a personality to me.
No, he's super low energy. I mean, the only guy I could see that people like his charisma is Keenan Grace. I mean, I don't know if you've watched his video.
Yeah, I watched a couple of them.
He's funny. I mean, yeah, he doesn't know crap about investing, but he is fun to watch. So I can see that. But
he's got the energy thing down where he's just like this super positive guy. And I get how that can be seductive.
Very seductive. Irresistible. Do you have your oven mitts? It's about to get hot in the kitchen.
I do have oven mitts.
You need to bring them to the next live stream.
They're right across there in the kitchen.
Do you want to go get them?
Sure.
We all have to bring our oven mitts for the next.
Let's do a house tour of Jay's house now.
Yeah, Jay, we need to see your house, man. You need to do a minimalism video on how small your house is. You got to keep up with the time. These Santa Claus mitts. You baking Christmas cookies.
Dude, I got to use this to move my grill, man. That's why I got like these super ones.
You got to wear those so you never sell any stocks.
Yeah, can you make them like a light blue so they look like diamonds?
Oven mitt hands. Yo, bro, I got oven mitt hands. What do you got diamond hands? I got oven mitt hands. Dude.
They're investing in index funds.
Yeah, it's like I understand Andre Geek and I understand Graham Stephan, right? I understand why they get a lot of views. I'm like, Andre Geek's this harmless little guy, you know, he seems like a nice guy. Graham Stephan does the talk really fast YouTube cut thing, gives actually solid advice. But a lot of the guys, I'm just like, I don't get it.
I don't know, man. Maybe they just got lucky on one video and that was that. Or maybe they just started a long time ago.
And they started a long time ago and it was actually easier because there was less people doing it.
Yeah, the market's so saturated. I mean, it's crazy. But
yeah, that's the thing. Like, because the CPM or whatever is so high on like finance videos, like everyone's doing it because if you can get to a certain subscriber amount, it's a valid like secondary source of income.
Yeah, but like I'm confident about our long-term prospects because a lot of these channels aren't going to survive a bear market, you know. And we're basically like buying stocks on the cheap, you know. We're talking about like real investing, where everybody else is talking about the stupidest freaking stocks possible, which is just not sustainable. We're buying the dip right now.
Yeah, there's another guy. I gotta pump this dude. There was the dude I told you about that did the Baba stuff because he's actually doing discounted cash flows. So I did a video on basically say this guy Fox, you know, I'm like using the fucking Reddit terms, but he I mean, I don't agree or disagree with the numbers that he's using in his cash flow analysis because I point out in the video, I go, okay, if you guys want to understand why I personally don't do discounted cash flows, it's for this reason. That's an opinion on how it's going to grow. All you're giving out if you're spending a Saturday sitting around doing discounted cash flows, all you're really doing is just pulling numbers out of your butt. No matter who you are, you're taking a guess on where you think sales are going to be, and you can estimate, but then again, anything can happen.
It's all guesswork. I mean, like I did like a practice one because like I've never done like a full in-depth discounted cash flow of any company. I mean, I'm an accountant. I look in the past, but
I haven't done it since college.
Yeah, like what I did is I like averaged out the average cash flow growth for a company, and then I projected that out 10 years. And then I said, okay, I'm going to apply a price to cash flow multiple to this specific cash flow, which I guessed at. I said, okay, this might be the valuation in 10 years, but I'm not like an astute discounted cash flow analysis guy. I've never done it, but
yeah,
I'm curious to learn.
Yeah, I need to go back and refresh my memory on all that stuff because, like I said, I haven't done it since college. And but it was something I talked about at the time. Like, aren't we just guessing? Or,
it's all guessing.
Yeah.
Mo, didn't you do one, Eric? Wasn't there like one of those videos you were doing? You were like looking at the earnings per share and projecting out growth. I thought that was a really good video.
Yeah.
Oh, the Shopify one.
Yeah, that was really good.
Yeah. So that's the way I look at it is like I like to use multiple of earnings, right? So like you can do it in two ways. One is just like use EPS, right? Like what does EPS need to grow to say like this year in the future, multiply by whatever you think their PE ratio will be that in the future, and then what's the valuation, and then how much return are you going to get on an annual basis if they get to that valuation in say 5 years or 10 years, right? And then with the discounted cash flow, you're really looking at a range, right? Because even if your range is like super wide, right? And this is kind of the basis of the margin of safety. If you project their share price now to be, say, between $30 and $130, and it's $10, you have the margin of safety there. But if it's like $100, there's less margin of safety. You could still be right if they are worth $130 by your calculations, but there's less margin of safety. And then I also like to actually look at, just say, keep things simple, right? Like what's their net profit margin? So say like, 6% or whatever. What's their revenue growth? Project revenue growth for a few years, project their net profit margin, get their earnings, and then just take a multiple of earnings or whatever, and then figure out what you think their valuation should be based on that projected earnings and say, okay, how reasonable is this? Do I think that they can actually achieve these numbers? Like, is it higher than what people are expecting? Is it lower? Is there something I know that other people don't? And then that's kind of how I approach it, right? Like, I don't try and pick a specific value. I try and go, what are people projecting, right? Like, based on the company's valuation today, what does it need to grow out to justify that valuation? And then is that reasonable?
And the thing with discount rates is it's all based on your required rate of return. So if you want a 2% return, you can pick a price to buy the stock at. But if you want, somebody else might want a 10% return. So each discount rate is going to give you a current present value of all the future cash flow. So there's just so much that's why I think a lot of finance is all voodoo and guesswork and BS, which is why I freaking hate individual stocks. The more I learn, the more I hate even considering buying one, unless it's like a super good deal.
Mm-hmm.
Yeah, which is hard to find in this market. I mean, like you can just put on like a stock screener and look at like individual ones. And I mean, it's just so hard. There are still deals though. Like what I like to do is I like to follow, some of the bigger investors. Like I like looking at Michael Burry just out of curiosity to see what his fund invests, because oftentimes he'll buy like a stock. Like that's why he invested in GameStop, right? Because they were like at $3 a share or something. Or I don't know, something really low. And then like, we don't know exactly why he bought it, but part of the reason which people think is because he did an analysis and said, even if the company goes bankrupt, right, they liquidate all their assets, they're still worth more than what they're selling for. And then that's the margin of safety. That's how he bases all his investing decisions on, is just margin of safety, right? So that's why I like to follow him, because he identifies those like rare stocks out there in this market that have the margin of safety.
Yeah, like I'm pretty confident. Like if I had a little bit more training in like, financial modeling and, just projecting cash flows, I think I could probably pick a lot of winners, but I need to actually really practice at that, which I'm not ready at this time. I know a lot of these YouTubers, everybody thinks they're a genius, but I guarantee you none of these clowns are doing anything remotely like what we're talking about. Bro, it's the future, bro.
Yeah. I guarantee you that they're not sitting around doing discounted cash flows. I'm just, and it's like, well, I'm going to sit around and do this discounted cash flow. Why? You can just go to Sven Carlin's site and he's already done the work. Unless you disagree with him, but that's ultimately at the end of the day, there's so many YouTubers out there who are actually doing it. Then goes back to what's the point?
I mean, I don't trust like anybody else's opinion. Like if I was really experienced and I was really trained on modeling, I wouldn't read any news articles. I mean, maybe some to kind of understand the company maybe a little bit, but
that's how Warren Buffett does it.
Yeah, you just literally look at the stock's financials and you extrapolate its future growth, and then you determine your own price point. I mean, that's the best way to do it, I think.
Yeah. And, it's again, I go back to, if you're a dude that works 40 hours a week and you have a kid, how much time do you really have to do discounted cash flows on stocks? How many companies can you honestly look at properly?
I mean, that's all I do all day. I mean, if it's like your hobby, cool.
Yeah.
But yeah, most people don't have, like, they work and they come home and the freaking kids are causing a ruckus and they got obligations. Like, most people don't have time, which is why they either invest in mutual funds or they listen to idiots on YouTube. It's the two ways to really get advice nowadays.
Yeah, and it's also the laziness of you don't even want to do the work to basically investigate whether this guy who's giving you advice really even knows what he's talking about. Here's a good rule of thumb. When somebody gives you a stock tip and that guy is borderline retarded, go with a grain of salt on his stock recommendation.
just one grain of salt, Jay.
Yeah, it's bro. Did you hear? I was watching this YouTube video. You're into investing, right? Like, yeah. Like, bro, have you heard about this NIO company? Like, yeah, bro, you want to get in on it now, man? It's going to the moon. I was on the Reddit forums. And this guy, Chris Sane, he told me about NIO. And so I'm going to be on the moon, man. Where are you going to be?
What's your price target, bro? It's going to be 60 by December. It's going to be 65.2 by January and 75 by February 26th. I just know.
It was here. Like I tell this Tesla tale, sitting in the break room, eating. Hey, woman knows nothing about investing. Hey, so Tesla is the company I should buy right now, right? I go, based upon? And she's looking at me. I go, yeah, no, I know you're saying buy Tesla, but what are you basing that on? Like, are you looking at the PE ratio? What, do you have like some insider knowledge? She's like, I'm like, have you even maxed your TSP yet? She goes, no. I'm like, do you know where your money is in the TSP? And she goes, no. I go, then why are you buying individual stocks?
I bet you it's all in the G fund too, which the G fund, if you don't know, is like the most boring, slow growth bond fund that most people get defaulted into the G fund. So, and they don't even check their TSP. So like they invest for 30 years and they made like a 2% return.
My buddy Chris that we had on, he called me and I said, honestly, I'm like, you can't go wrong with a targeted date fund. But I said, you can approximate the total, because you told me this, you can approximate the total U.S. stock market, 80% S&P, 20% S fund. But then I told him, I think international is going to run for the next decade. I told him to do 60 in the C fund, 20 in the S fund, and 20 in the I fund. But I also told him there's certain markets that the I fund can't go into.
Yeah, so like the L funds, they're basically like target retirement funds. But if you buy the furthest out fund, it's basically 100% invested in stocks, and it's at market cap weights for what you can invest in the TSP. So it's like 35% I, 15% S, and the rest C, which I literally just transferred all my money into the L 2065 fund. So I was like, you know what? My strategy in my Roth is market cap weights. I'm going to do the same thing in my freaking TSP. I don't even try to like overweight stuff.
So what are you going to do when they come out with, leave the money in there, and then when they come out with a fund that's further out, get that one?
Yeah, I mean, if you want to be 100% stocks, that's what you would do. So they come out with a 2070 fund because like over time they transition to bonds. So you just sell that one, move it over to 2070 if that's what you want your allocation to be.
Well, it's not a bad strategy, but you also have to remember Chris doesn't want to learn this stuff, and he's got 2 kids.
That's what tell me if you want. Just say, hey, do you want to be 100% stocks? Okay, 2065 L 2065.
I'll text him and say, look at the L 2065.
Or tell him he can buy my course. It's only $550. And I can teach him what L fund to invest in.
You should actually text him that and see what he says.
Oh, what book is that, Jay? Who wrote that book?
Stop being a broke loser.
Stop being a broke. Do you feel like you're a broke loser, ladies and gentlemen? Well, I have the solution for you. On top of my $550 course, which you can only access it for a day and then it closes, you can also buy my book, Stop Being a Broke Loser, on Amazon.
You were cracking me up when you kept raising the price of your course.
Oh, and then the Discord. You got to throw in the Discord, too. It's like you have the different tiers of Discord.
Yeah, you need the community.
Yeah, like I'll have one Discord where I only tell them to buy S&P 500, and then there'll be the next Discord where it's like VTI, and then the final Discord, which is like $1,000 a month. I'll say, oh, just buy VT.
Dude, that's basically what a lot of these guys do. Support me on Patreon or Discord, $4 a month. Dude, why would I pay you $4 a month? You don't even have a fucking bachelor's degree in accounting or finance.
I mean, maybe like if we started really going and doing models of stocks, we could probably charge. But with the advice that we're giving, I mean, we're basically stuck with maybe a cheap course, or maybe a book. But it would be kind of wrong for us to charge $100 a month for a Discord just to tell people to buy VT.
Well, that's what. That's why StockMo annoys me so much. Was it $120 for his top?
StockMo. Hey guys, it's StockMo here.
Yeah, somebody was calling me just a hateful, spiteful person, and I'm like, towards him, I am, because I know what he's doing to people's futures.
I mean, I don't normally judge people on their looks, which is why I hang out with you, Jay. But StockMo is just out of control. Like, that guy just rubs me the wrong way. Better to buy VT than get VD.
I don't know, man. It depends, man. If you get the right VD, that shit's with you for life. That's a constant companion.
You have any VDs, Jay, you're going to tell us about?
Just raging, untreatable gonorrhea.
Uh-oh. Me, Kevin bought more AM. Wow. Really? Me, Kevin bought AMC? That's crazy. I can't imagine him doing that.
Dude, some reason, even when it keeps going down, he's hoping. I know he's hoping for a gamma squeeze.
It's the squeeze, bro.
I hope it goes down so I can make money on my YOLO put option that I bought. Like a good neighbor.
Dude, yeah, God, I want a correction in the stock market so bad so I can just go on Kevin's channel in the comment section, call him a dumb motherfucker and tell him, like, what did I say to you a year ago? I said, you are dangerous. Stick to real estate.
I mean, the sad thing is I think a couple bubbles will pop, but there might not be this massive catastrophic crash, which sucks,
Flat decade.
Yeah. That's what I'm saying. International. So hot.
Yeah. Do you guys know the Everything Money channel, right?
Yeah, I love those
Yeah,
guys.
they're a good channel.
Did you see their video where they were reacting to Meet Kevin's Tesla price prediction? Man, that was brutal.
Well, they helped me learn who to dump on. Like they talked about Kevin, they talked about Stockmo, they talked about Human Grace.
Recently, Paul goes, this dude he was talking about this guy who's really good. And he's like, I agree with, he goes, this guy, I forget the guy's name. I did a video on him, but he goes, I don't agree with him on everything, but I understand where he's going and I understand why he does it. And he goes, this guy is the complete opposite of that moron in California. Kevin.
Dude, I think I'm going to create an email address and email my channel to them to see if they feature me on there.
Dude, if we got big enough, they would probably do a react to this, or at least some part of it where we're sitting around talking. They'd be like, Paul would probably be like, I agree with them on a lot of what they're saying, because they're saying the average person doesn't have the time to actually do this properly. So they're best off with index funds.
But what if he watched my Dogecoin spoof video, but he thought I was serious and then he agreed with me? What would you do, Jay?
Abandon all hope.
Man, this discounted cash flow of Dogecoin is very impressive.
I would love to see them do that, thinking that you were serious, so you could just email them afterwards, be like, "This is a joke, dude." Like, what is this moron saying? Inverse triple flip pancake ratio.
Apparently, that pancake thing is like some thing to do with cryptocurrency. Like, there's something called like pancake swap. That's where I got that from. So it's real. It's out there.
Yeah, well, there's some like exchange that's called like I can't remember what it's called, but it's something to do with pancakes. But yeah, there are like actual indicators that people look at with crypto, like hash rate, for example. But all they are really is just a symptom of demand. Like if demand for the cryptocurrency is going up, then yeah, it's going to have a higher hash rate. More people are buying it.
It's very insightful right there. So you're telling me we can just look at hash rates to figure out trends. Do you have like moving averages of like daily hash rates that you can look at?
Yeah, you got to look at the moving average, convergence, divergent, by whatever the word is.
Inverse pancake swap. I forgot what I called it already, but
dude, I did a video on how Logan Paul's Pokemon card. It's not
a chain with the Pokemon card on it.
Dude, this guy goes, somebody already offered him this much money. Why don't you do some research, loser? And I go, if it doesn't produce cash flows, it's not an investment. Like the dude couldn't get through his head that it's just really the greater fool theory.
Look, did you see that video we watched with the bingo guy talking about cash flows doesn't matter? I mean, come on. He looked at the financial statements. Obviously, cash flows don't matter anymore.
Yeah, it's a new era. But I would love to be in front of Logan Paul, and he's like, dude, he goes, you see this? This is a rare Pokemon card, and it's worth nothing. It's worth nothing.
There's actually this guy I saw in a news article. So he won $30,000 in the lottery, and he bought this like diamond chain for $20,000. He basically dumped all his money into a chain. And then these other people came to the gas station, beat him up, and stole it from him. I was like, dude, I'm thinking about making a spoof. Like, if you had just bought VT, nobody would have been the wiser, buddy, or something
dude,
like that.
You should pull up the article. Been like, had you used common sense, bought the entire world market, nobody would have known that you had the $20,000 in there.
Yeah, see, nobody would possibly know that I have a lot of money invested in the stock market because I dress like absolute crap and I drive the worst freaking car. So, like, I'm never going to get robbed or shot because everybody just thinks I'm insanely broke.
Well, dude, it's like I'm in the same boat. Like, I'm walking around. They'll be like, I'm not going to rob a motherfucker walking around in a Hawaiian shirt with shoes that are falling apart. And he looks like he owns 2 pairs of jeans, which I do.
Oh, so my friend was watching your videos, Jay.
Yeah.
He basically noticed you wear the same shirt.
Yeah, I know.
How many pairs of that shirt do you have? Or how many?
I only wear it for videos.
Oh, I was like, damn, this dude has the same. I didn't even notice that, but you wear the same shirt every time.
Gets me in the. I wear this when I do stand up too. It gets me into the mood.
Yeah, you got to keep the brain consistent.
Yeah. No, dude, I just think it's funny to wear it over and over again. Like, so people are like, does this motherfucker even change his clothes?
I didn't even notice until he pointed that out. I was like, holy, like, how often do you wash that, Jay?
Once a week.
Okay. Okay.
But you have to look at it. I don't even wear this shirt, honestly, probably as much as somebody wears a normal shirt in a day. I probably wear this shirt 6 or 7 hours a week between doing videos and stand-up versus the average person walking around with their shirt on for, 10, 12 hours a day.
I'm actually going to, if I ever come down to Florida, I'm going to sniff your shirt and give the final verdict on whether you wash it enough.
Well, no stink, man. I wear deodorant too. I shower. Somehow my water bill was $100, and I'm like, look at
what? What's wrong with you?
I was like, dude, I take combat showers of 5 minutes, and I'm the only person that lives here. How the fuck is my water bill $100?
Do you run the the sprinkler system and stuff? So you might have a leak, dude. That is very unusual because my water bill is like $30 a month, and there's 2 people in this house.
Yeah, that's what I was. I'm gonna have to. If it's another bill like that, I'm gonna be like, dude, where is this water running?
Dude, something's wrong. I would say.
Yeah, I agree with you.
You could have bought the entire world, but instead you spent it on a leaking.
Yeah, let's calculate how much he just lost in retirement with that water bill.
Well, you put $100 and it doubles every decade roughly. So $200-$300 there, Jay. How do you feel about that?
That's what I was saying. Like, if you look at like the $20,000 course, like how much money that honestly is realistically if you spend it at like 20 something years old. What that $20,000 would have turned into by the time you're 65 or 70.
Yeah, because it would double probably 4 times. So it'd be like 20, 40, 80, $160,000.
Yeah. I read something recently that having 6-month emergency funds, right? Where you save like 6 months expenses, put it in like a savings account, put it away for a rainy day. I read somewhere that like having that, like having one of those in your 20s, instead of investing it can cost you like, I forget what the number was, but some insane amount in retirement. Cause like if you compound that at 7 to 10% over, let's say like 40 years, I mean, you're talking about a ton of money, right?
I mean, you could literally because you're still in your 20s. I mean, if you just went balls to the wall and just like maxed out all your tax advantage accounts and then you stopped at 30 and never saved another dime, you'd probably still be a multimillionaire. It's all about getting that money in there while you're young.
Yeah. So I did this calculation here. So if you have, say, like your emergency fund is $20,000, you get 10% a year for 45 years. That's almost $1.5 million.
Jesus.
I mean, if you're watching, you should have emergency savings. We're not saying invest your emergency savings, but you shouldn't hoard cash that you're not going to need for emergencies. You should invest that instead, especially if you're a young man. Where'd Jay go?
Oh, he left. He's done.
He's done.
He went to go invest his 6-month emergency fund.
Jay, the market's closed. Stop. Well, the crypto market's open. Maybe that's what he's doing. The crypto market's always open. It never sleeps.
Yeah, it has to. That's how the day traders stay up at 3 a.m. That's how they entertain themselves, right?
I mean, yeah, if you got nothing else to do, why not? I'm actually disappointed Jay didn't wear his kilt today.
Yeah, what's the no kilt?
Where's your kilt, bro?
My room. Dude, in all honesty, man, I'd rather just leave room on my cashback rewards card for emergency than have just cash sitting in the bank. This is me.
Actually, I moved because I had a ton of cash in emergency savings. I moved into Fidelity. I put like a good chunk of it in VXUS, and then I have like 10K in really short-term bonds. So worst comes to worst, I'll freaking sell the bonds.
Yeah, I mean, there's nothing wrong with that, but I'm just like, people are like, oh, you X number from in my situation, I don't. You know what I mean? With just my personal situation where I'm at. It's like, okay, well, I get all my health care through the VA, so we've eliminated that problem for me. So then what's the point of me having the cash sit there when I usually have $10,000 or more on my credit card that I could just throw down?
Yeah, you got to be careful though. Like, if your roof, like that's what I'm worried about, is my roof going out or heater, because then you're going to pay 5-10 grand, and then if you don't have savings, you're going to get pounded. Me, Kevin, make money from their courses, lose money, buy them AMC.
Is that what he said? Because it didn't pop up on mine. Yeah, dude. That was.
Look, that's why I need to create a course, man. What am I doing, ladies and gentlemen?
Dude,
how do I even invest?
I hope AMC goes to zero and he's sitting there like, I don't know what happened.
It's the suits, bro. That's gonna be his excuse. It's the suits. It's the boomers.
and here's the thing, man. Like, is he even paying attention to the massive? They've quadrupled the amount of shares outstanding, which they're smart. Take that money from that.
Yeah, that's what I'm saying. Like, when there's all these like meme stocks out there, like if you can raise capital at like 20 times what your company is actually worth, then do it. Set yourself up. Even if you're a dying company, like do it right now.
Yeah, I mean, they'll probably survive a couple more years just on the shares they're issuing,
Yeah.
Oh, dude, if I was Elon Musk, I'd be issuing shares.
Well, he is, right?
Is he?
I'm pretty sure. Yeah, Tesla's shares outstanding have gone up quite a lot. Like, it's not like 3 times over 1 year, but it is like slowly going up. And even like beyond that, like they have employees who have stock options in the company, right? So even if they stop issuing shares, they have enough cash to supposedly go from however many cars they produce, like a few 100,000 to 14 million supposedly. Like, even if by some miracle they don't have to issue shares to do that, like there's still going to be a lot of stock options, right? Which isn't huge, right? But it's still dilution, and they're not going to be buying back their shares.
It all adds up, man. I mean, you got stock options, share issuances, convertible bonds. Some companies have that. I think NEO has convertible bonds, which means they can be converted into a ton of additional shares.
Sven Carlin went over this. NEO's diluting their shares like crazy. He does an excellent video on why you should steer clear of them.
Yeah, but I mean, look at the hate comments. I mean, are you sure that Sven Carlin knows what he's talking about?
Sven Carlin probably doesn't even
gorilla in my comments, Jay.
He probably doesn't. He probably doesn't even know what diamond hands are. That's why I mean, he's a foreigner. He's got a weird accent, so I'm not sure I can trust him. He sounds like Borat a little bit. Tesla, BlackBerry, baby. Oh, is Kevin buying that? It wouldn't surprise me if that's what's next.
That was from Nerdy Fernie. Nerdy Fernie said he has 80% BlackBerry, 30% Tesla.
That's
leverage, man. Leverage.
Portfolio, dude.
I want to know something funny about BlackBerry. So their founder and CEO, Mike Lazaridis, he donated about $50 million to the business school I went to build us a new like facility, like a really nice facility for all our business courses. And like it was being constructed like as I was there, like it finished, like I graduated last year and it was done by then. But yeah, really nice facility. And I mean, at least BlackBerry's done something for us.
Yeah,
dude. For financials though, I mean, it's going to the moon, bro.
How bad is it? I haven't even looked. I'm like, this is stupid.
It's trash. I mean, literally every stock on Wall Street Bets is just complete and utter trash. All of them.
But that's what I can't figure out. There's got to be a reason. Somebody's got to be behind the scenes going.
Yeah. Well, with BlackBerry, they only do software now. That was their main shift. Like they did the phones, obviously, right? But now I'm pretty sure they like focus on cybersecurity and software.
Yeah, because like I was looking at their balance sheet and there weren't any inventories, and I was like, what? So then I realized after I did the video, I was like, oh, they're probably doing something else. But
Yeah,
Well,
they're
that's
losing
funny.
money.
He also has 10% in Fleshlight.
That might be the perfect portfolio.
I can't beat that, bro. I mean, I saw a 30% gold, 30% silver, 40% Bitcoin portfolio, but I mean,
there's this like venture capital firm called Vice Ventures, and they only invest in like Vice type companies. So like, alcohol, gambling, adult stuff, I guess. Like just all those types of startups. And I was like, okay, I mean that's one niche you can go after.
I mean, that might be more sustainable than a lot of these other companies people are buying. I mean, I don't think alcohol or cigarettes are going anywhere.
Yeah, when you go into bear markets or times of uncertainty, like with COVID, cigarette and alcohol sales go through the roof.
Yeah, they're a sure thing in those times.
Yeah. Yeah.
Isn't that actually true though? Like people have looked at like how alcohol is performed in like downturns, and like if the market's down, 10% in 1 year, alcohol, like it's not a lot, it'll be like 1%, but like alcohol generally actually doesn't do bad.
Yeah, I mean, all companies do good in different cycles. I mean, it wouldn't surprise me if alcohol kills it when people are depressed and sad.
Dude, this is in today's world. There is still so much ignorance in the general public about investing that if the total world stock market fell by half tomorrow, the three of us would be like, sweet. Then people would honestly look at us and go, why are you happy that this happened? Because they don't understand, like, it's going to come back, man. Like, what? Look at all the people that were panicking last year, as the three of us were undoubtedly just buying I know I was buying hand over fist.
I made some money off of it, but I kind of missed the opportunity because I was right in the middle of getting prepared to move. So I was like hoarding cash to buy my home. And then I was able to finally started, throwing money in around June. So, I mean, I still made a decent amount of money in some investments, but I definitely missed like the March madness and, April.
Yeah, I mean, don't think that I was throwing massive, but I was throwing like during that time, I was throwing like $2,000 a month at the stock market between my TSP and my
family. I had way too much cash. Like if I had executed like in April or March or April, if I had been so laser focused on my house, I probably would have made a freaking fortune.
You probably would have made 60% on your money, because that's what people aren't getting. It's like, so-and-so made 70% on their portfolio last year. U.S. growth funds up 69% or something like that. The total world market is up by like 60%.
Yeah, I mean, my target retirement fund is on freaking fire, and it's a target retirement fund. I mean, come on, it was at like, whatever. It was at a certain amount, and then I was like, it went up by like 60, 70%. I was like, holy crap. And that was just in the last year.
My M1 finance portfolio has like a 50% return. And I'm like, I randomly bought stocks in this portfolio.
Look, all you got to do is have a half of your screen is your Robinhood portfolio. And then you just buy a bunch of meme stocks, and then you'll get 500,000 subscribers like Chris Sane does.
I thought about doing $20 a month in a Robinhood account, and it's just me trying to beat the market. So going over years, this would be like over 20 years. And it's that $20 is just careful thought, just for fun.
Just put it all in Baba. Or do 99% VT, 1% whatever company you think is going to outperform, and then you'll beat the market. That's all you have to do.
True. But I was going to load up on like BlackBerry stock and just crush the market.
Have you heard of Naya?
No.
Did you know they sold 20,000 cars in the last quarter?
In China?
Yeah, and they project that there's going to be 70 million cars sold this year, and Naya will roughly have 100,000 of those. So I can see why it's valued more than Ford right now. Dude, I can totally see it.
Is Naya valued more than Ford right now?
I think it is.
Yeah, it's like Ford's like 60 billion or something like that. NIO's like 72 or 74 billion. But it's just so much exuberance because like they're like people have their convictions, right? They think that this stock's going to keep going up and up and up, and like they can be valid like predictions, right? But even if those come true, like what's the point of buying it today? It's clearly overvalued, right? It's probably going to come down in the future if there is some type of sell-off, if people just for whatever reason aren't optimistic about it. And if it was the future back then, why wasn't it or if it's the future now, why wasn't it the future like last year when it was like a fraction of the price? Like, why are you just talking about it now?
Well, I bought NIO at 20 and sold it at like 43.
Jay, you're a genius.
Wasn't that hard to figure out? And what did I use? $300, I think.
Can y'all see this?
Yeah.
And what is MPLY?
Ran from 8 in 5 minutes on Thursday pre-market.
That sounds like a stock you shouldn't be playing around with if it's that volatile.
I mean, look, I don't know how big your portfolio is, but I mean, if you told me, like, I don't have a problem with speculation. Just don't use a large portion of your portfolio.
Called Medley Management. It has a market cap of 38 million.
Does it even have a PE ratio?
It does not.
Negative earnings per share.
I mean, I'll look at Morningstar real quick. See if we can see what like the cash flows and stuff are.
Selling naked puts on that.
That is one area that I do want to start doing with a little bit of money. I don't know anything about it.
Well, not like naked, like you want to do actual puts, right? Like if you do get assigned the shares and you can actually buy them, like it is actually a really good strategy if you know what you're doing and you have a lot of money. The problem is like you do need a bit of a larger account because like
selling puts.
Yeah, selling.
Ooh, that scares me, dude.
But
anything that involves options and selling, I don't like it.
But the thing, like the strategy people use is say like there's a stock, you think it's a value play, you want to buy it at 20, it's at $30 right now, right? You're just saying, I only want to buy it at 20. If it hits 20, I'm going to buy it, right? So you write a put saying at 20, if the stock goes to 20, then I'll buy it. So if it does, then you get assigned the shares, then you buy them at 20, which was your price. The risk is like it falls below 20 and you have to pay $20 for a stock that's only like 18 or 17, right? But if you're going to buy it at 20 anyways, then you would have bought at 20 and then it would have gone down to 17. You'd be in the exact same position. But with puts, the thing is you get paid for waiting for it to happen because you're selling someone the right to force you to buy the shares at 20, right?
Yeah, but like the risk is your prediction is wrong and you're forced to buy those stocks or you're exercised and then you're screwed. Which is like
that's your downside, right? But if you have the mindset where it's like if it hits 20, I'm buying it, like regardless of what, because you believe in the fundamentals and you think even if you buy it at 20 and it goes down to 15, it's still a good value stock and I'm going to hold it for years and I think it's going to go higher. Then like if that's your mindset, then you're okay with it, right?
I see what you're saying. Yeah, that kind of makes sense. But I mean, like you probably have to have a lot of money on the. Yeah,
you do because each contract is 100 shares, right? So with 20, you need 100 shares. You need like $2,000, which isn't like a lot, but you do need that in like cash ready to buy it if you get assigned, right?
Yeah.
Yeah. At the end of the day, man, I think I'd rather go with index funds.
I would just say if you want to screw around with options, and that's anybody watching, only buy calls or buy puts and buy small ones just so you freaking learn how it works. But I would not be selling any options. That's more for like sophisticated investors or people with a lot of money. Because if you sell an option and you get exercised, you are forced to buy hundreds of shares, depending on how many contracts you wrote. So it scares the crap out of me personally. I don't know. I'm a chicken crap though. All right. So I'm looking at this company, negative 20% revenue growth over the last 3 years, operating margin of negative 14%, negative free cash flow of negative $3 million. Yeah. Revenue's been going down every freaking year. Yeah. I mean, if it's like a trading stock, Medley, whatever it is, okay. But I wouldn't buy it for an investment.
Yeah, dude, I'm gonna steer clear of that one. I was actually thinking about going in with these dumb apes, just buying stuff and then selling it when it went up. But I was like, I'm not doing that. I don't care. These people are going to lose all their money anyways.
My friend has a theory that you're actually trading all the meme stocks and you're hiding it from us. Is that true? he's like, yeah, that guy totally is playing the meme stocks. Is that true, Jay? I'm confronting you right now.
I actually thought about doing it. I really did. I was like, okay, all right. If I could throw $500, make 20 or 30% on it in a day and just keep going.
No, you're like 100% into meme stocks, aren't you? You look guilty. Just a little.
This guy's an imposter, man.
You caught me.
What if we were all just like meme stock traders? And we were just like completely lying. VT, I don't buy that crap. I'm 100% GME, bro.
Dude, it makes my skin crawl when I saw this one. I don't know, because you can fake all that stuff, but it was like $3.5 million in like 2 meme stocks. And somebody said, you could have lived comfortably off that money. I'm glad you decided to stay retarded. And I'm like, you guys are not going to be laughing about this when you lose your money. Trust me.
If I saw gains like that, in a heartbeat, I would sell it. I would quit my job and I'd be set for life. 3 mils? Woo! That's all I need, baby.
But my question is, how did you get 3 million? You must have had to inherit that.
Tesla.
Because or maybe you sold Bitcoin or something.
I mean, well, you can, if you get lucky a couple times, like one of my friends trades options, he made a ton of money on a couple plays. So if you get lucky a couple times, you can massively compound that to the point where you have that seed capital to like YOLO it all into AMC or GMA. So, I mean, there's 1,000 ways you could have got the money.
Well, yeah, you told me your guy made $100,000, but he had to use $35,000.
Yeah, no, I mean, it was a huge risk. I'm not saying you should do that.
There is no way. I would have to be have like $30 million in the bank before I could look at $35K and YOLO it in on a play.
Yeah, no, it's ultra high risk, but $100,000 in a day.
You just have no balls, man. Come on.
They once they saw that I bought VT, they knew I had no balls. So I can't argue against that.
Dude, I aim to stay in the 6-figure club till I'm in the 7-figure club. I'm not playing with $35,000. That's how you go fucking broke.
But you could be in the. Imagine if you YOLO'd all your money right now, and then you made 500% in a day. I mean, think about that, Jay.
Yeah, I'm good on that risk.
Where's your balls, bro?
They're tiny and weak. Not like the giant brass balls of a Marine who stormed Iwo Jima.
That's like history. We don't want to talk about that.
The last.
Sorry. What do you think about Palantir? Trash.
Wait, is Palantir?
I don't know if I'm ready to call. I don't know if I would necessarily call it trash, but it's
on
like
a fundamental basis. It is.
Did you look at it? Because I didn't look at the fundamentals.
Yeah, I did. I already forgot, but I just remember I wasn't happy.
Yeah, it's like another NIO one where it's like not going to be profitable for a while. But I didn't know if that Palantir was shorted.
Is a flow shorted?
Because it needs to be shorted for there to be the squeeze, right?
Yeah, it's got to be true. I'm pulling it up now on Morningstar. I already forgot what I freaking did in the video. I just remember I wasn't happy about it. Yeah, it's got negative 100% operating margin, negative 68% return on equity, negative 40% return on assets. So revenue is increased every year, but their losses have increased proportionally every year.
Yeah,
and then
they are an interesting company though. I heard, I don't know if this is true, but I heard that they develop software for the U.S. government, right?
Mm-hmm.
Which, I mean, I don't know how big a company can get just relying on the U.S. government for their money, but
I mean, pretty big actually. Pretty big. You know what we spend here in America, bro?
But yeah, like they had something to do with like capturing Osama bin Laden. Like they built some software that was designed that like the US Navy, or I don't know how that works, whoever like went after Osama bin Laden, and they actually ended up like it was part of the whole process, is what I heard.
Yeah, I mean it's a cool, exciting company, but I mean even looking at the operating cash flows, it's been negative for the past 3 years, and I can see the financing cash flows going up, which means they're issuing lots of shares. So I don't like it at all, but it's what Robinhood likes. So, and Morningstar's fair value is 25, and it's currently at 24.67. You take that how you will, ladies and gentlemen, but if you want to play it as like a meme trade stock, okay, but I don't like it from a fundamental perspective. I'm very picky, ladies and gentlemen. I don't like most stocks. I might actually do a you're muted, Jay. I might do a video on like Apple, just so I'm finally not dumping on every company that I review.
Yeah, like you can do videos on companies this is what I want to do going into the future, like take companies that are making money. So you're not just like, saying, oh, they're losing money. Because like if you're talking about a company that's losing money, their fundamentals, like there's really only so much you can discuss, right? But if you're talking about a company that's making money, then you can actually say, okay, how much growth are they projecting? Is that reasonable? I mean, just look at like industry trends, whatever industry they're in. Are they projected to, take over the entire industry? Because if they are, that's a bit of a risk, right?
Yeah, I might actually do one on Baba. I mean, because I know they probably have massively growing operating cash flows. I mean, that'd be a good company to be like, here's something that looks good. And if it looks good, then you can consider buying it at the right price. So you kind of
Yeah.
Yeah, because I mean, all I've done is dump on stupid meme stocks. I mean, it's been fun, but I at least have to show people like, oh, here's a potential good company if you buy it at the right price.
Yeah.
Me, Kevin owns Palantir, shocking. Bingo, shocking. Tesla.
I can't wait to laugh at this clown in 5 years and call him a clown. I heard he's doing appearances now. I want to go to one of his appearances and call him a clown in front of his fans.
I mean, we could probably write that off as a business expense. I mean, if you generate any income this year from YouTube, like have some, I'll get one of your free Robinhood stocks. You can count that as income. Write off the flight and all that, and we'll go fly out to California and dump on him at one of his live events.
Dude, there's so many people that I don't care. Actually, I do. That's the problem. There's going to be a lot of people, man, that are just going to lose a lot of money, but hopefully it teaches them a lesson and they become more conservative with their money.
Look at my eyes, ladies and gentlemen. Put most of your money in broadly diversified index funds. And if you want to trade, do that with a small percentage of your portfolio. It's the last time I'm going to say it.
Yeah, and I mean, look, if you don't think that you can get rich speculating with a little bit of money, it always goes back to the Amazon thing. If you would put $1,000 in at its IPO, it'd be like $2 million today. Well, it crashed by like 80 or 90% in 99, I believe, and took 10 years to recover. Everybody's saying, don't say you would have held it. Well, you might have if you played with a little bit of money. You might have just said, you know what, I got confidence in this company. I don't care that it crashed by 90%. That's not a big chunk of my portfolio anyways.
Well, and the ironic thing is the more you like look at your phone and Robinhood, the more likely you are to like sell crap. So if people that are saying, oh, I'm buying this stock long, I guarantee you if they're checking their freaking phone every day, they're not going to be holding these stocks for 5 or 10 years because you can't resist playing.
And like it's zero fees as well, right? Because I remember when I was back when I was in high school and I opened up like my very first brokerage account to like begin trading, I had to pay like I think it was $7 per trade, and it wasn't a lot, right? And in the long run, it doesn't mean anything. But what it did is make you like rethink what you're doing. Like you're saying, okay, before I buy this, have I like actually researched it? How confident am I in this? But when it's like now, like I use Wealth Simple, which is like it's basically like Canadian Robinhood, except it's actually like a responsible company, and they don't have payment for order flow, and they don't have options trading, and their motto is get rich slow, which is great.
Mm-hmm.
Lame.
Yeah. But it's zero commission trading. And like if I wanted to, like when the market's open, if I see a stock I want, I don't even have to have the money in my account. I can just transfer the money in, buy it in 10 seconds.
Yeah,
Right.
they give you like trade credit. Like Fidelity has the same thing. It's pretty nice. You know, like when I transferred a lot of money in there a couple of days ago, so I had a margin account because I was like screwing around with it about a year ago. And I was like, oh crap, did I just buy this on margin? So I had to like call Fidelity and get that fixed. But once they fixed it, I mean, yeah, I had all the money available instantly to trade, which was pretty cool. But yeah, that's a good point. I mean, like back then they had commissions, so you had to really think, like, should I really buy this or should I really sell this? Now it's just like, oh, swipe your phone and you sell that stock that you were going to hold forever.
Yeah, it's very psychological. That's what I've realized. Like with this and basically all forms of money management, like the decision making is more psychological than just math based.
Yeah, and plus, like, I'm a super long term investor, and like on Robinhood, I've like bought and sold a bunch of crap. It's just hard to resist. That's why, like, I just put my money in the TSP and Roth and leave it because I know the more I look at it, the more I'm going to be screwed around with crap.
Well, also with us in the TSP, it actually makes far more logical sense to crush the TSP than it does anything else because it's a tax advantaged account. Like that's another thing that is going on YouTube, man. There's people that seem to be pretty knowledgeable and make good decisions, but then they'll talk about why they don't use a Roth IRA. And I'm like, I don't care what your plans are. You are literally stupid if you're not using a Roth IRA.
Bro, taxes don't matter. I mean, like, I did the math. So, like, I'm probably in the 22% tax bracket. And then for federal, and then my state is about 6%. So if I sold a stock, even though it went up 100%, I'm probably losing, what, 30% of that right off the bat? So I've been reduced to a 70% return.
How does capital gains tax work in the U.S.? Like, is it just 1% applied to all capital gains, or is it different?
Well,
So it depends on your holding term. So if you hold it for like a year or less, you're taxed at basically your ordinary income, like your work tax rate. If you hold it for more than a year, then you get preferential tax treatment, which a lot of these guys in Robin stock don't understand because they're buying and selling, and that's just adding to their income, which bumps them into a higher tax bracket. And they're going to pay that higher marginal rate plus their freaking state tax rate on all that money. So they're, even though you got 100%, you didn't get 100%. You probably got 60.
Yeah, it's
60,
the
70.
entire capital gain, right? So like if you buy at 10, you sell at 20, like that whole 10% or the whole $10 is taxed at whatever your marginal rate is, right?
Yep.
Okay. Yeah, because in Canada it's 50%. So 50% goes into your taxable income. Like unless you're day trading, obviously, and that's your primary source, then the CRA, which is the Canadian version of the IRS, will they'll notice that and they'll say, okay, you need to pay like 100% as this is like business income basically. But if
100% is taxable, but you're not paying 100% tax rate.
Yeah, like 100% is taxable. You pay your marginal tax rate. In Canada, it's 50% is taxable, and then 50% like is counted as your taxable income, and then you pay your tax rate on it, which the tax rates are quite high.
Yeah, it almost sounds like Canada has a better tax system for capital gains than we do. Yeah, if you day trade in America, I mean, you're gonna have especially if you get like a massive gain on like a spec stock and you sell it, you're gonna get freaking crushed. You better have like tens of thousands of dollars saved for taxes. Is anybody surprised by that?
Well, what does it say? I can't read it.
Me, Kevin promised he would hold AMC for at least a year, no matter what.
He's trying to be like the Roaring Kitty or DFV.
He's so cool, man. This Gen Z movement this youth rebellion is so fun. Nerdy Fernie, I was planning on holding my free Robinhood stocks for a year just for taxes. Yeah, I mean, if it's like a $5 stock, it's whatever. But yeah,
I mean, you gotta look too. I mean, how much is that really raising like your income? Because I mean, you could be in a position where you're like, I don't care. It doesn't put me into the next tax bracket.
Yeah, I mean, as long as you understand how you're going to be taxed, that's great. But if you have no idea and then you have these massive gains and you sell and you haven't saved any money for taxes, like you got a car or something, you're going to get freaking hammered tax season.
Yeah. Your Uncle Sam's gonna.
I don't know what that is. NASCAR All Out, bro. Just buy VT. 100% VT.
Wait, did you just say he made 1,000% on that?
No, he said anybody watch ORPH move on Friday? I had a buy limit at 8:30 around noon that didn't get filled. HOD ended up at 77.77. Yeah, I don't know what these stunks are.
How's that moving like that?
That sounds like a penny stock to me, or like a meme stock. Kamisha Jackson, I use Wealth Simple to trade too. Is it? You said that's just a Canada thing, or is that in the U.S.? That sounds familiar.
Yeah, so they're a really new company. Like they were started within this decade, and there's a lot of hype around them. They do. I don't think they have like U.S. accounts yet, but you can buy like U.S. stocks. You just have to like pay the currency conversion fee. I don't know if you can open up like a U.S. bank account with them though. But I think they are planning on expanding into that eventually.
That's cool.
Yeah, I mean it's an interesting company to follow, and like they said that they are going to go public at some point, and I just know that when they go public, they're going to be classified in like the meme stock category, which is the exact type of stock they would advise people against investing in.
Guys, wait till Robinhood goes public. I can't wait until Robinhood goes public. That's going to be a freaking madhouse. And Robinhood might actually be a good company to invest in. Like if you look, we need to see their financials, but I bet you they're making a ton of money with all these clowns. And like Coinbase is another one. I mean, like it's based on crypto, but if they had more solid fundamentals, they are making a killing just based on the fees and all the clowns that are trading in and out. They're making a fortune.
But what's going to happen to Coinbase when the crypto market implodes?
Oh,
it is a market that's going to implode.
Long run, they're screwed. Robinhood has a lot more long-term viability than Coinbase. Coinbase. So I looked up that stock that guy just talked about. Negative 126% return on assets. Net income basically going down every single year. I'm seeing a trend, ladies and gentlemen. Cash flow, growing operating cash flow losses, increases in financing. I'm seeing a trend here, ladies and gentlemen. Financing, stocks, and shares go up. Cash flows go down. Just the stock that you want to buy, ladies and gentlemen. Dilution and losses.
There's, you know what? Please have a market correction come. I need a lot of this stuff to go away. I sit there and I'm like, we know the stocks don't only go up. And I'm like, and then you come to me with these kind of stonks.
Yeah, you don't know that, ladies and gentlemen. You don't know that yet. But all right, I think we'll end it on that. Any last comments, ladies and gentlemen? Anything, Jay? Anything investing?
Subscribe to my channel.
Subscribe to Jay Noggy's channel. Subscribe to my channel. I mean, look at me. Can't you trust me? Look at my hair. You can trust me.
I'm still going to say that investing with Rose is better looking than you. You tried to make that.
No, that nobody's better looking than me, Jay. And don't forget to subscribe to Investing Sucks. He actually has very good videos, and he's a fundamental investor. I know a lot of you clowns don't like that, but you might actually learn something.
Bro, Eric, you should go to my site and steal that Peter Lynch video and put it on your site.
Yeah.
Oh,
I tried that. It didn't work.
Dude, let me send you. I'll send you a picture of the tags I used.
No, I stole everything. I stole the tags, the thumbnail, the video.
Why did mine catch on fire and yours didn't? I've probably gotten from that video over 100 subscribers.
I know. I was jealous. I was like, damn, how does he? Come on. So I put the video on my channel, and then nobody watched it. Yeah. Here's another one, ladies and gentlemen. Just buy properly diversified total world index funds. That's how hard investing is, ladies and gentlemen. I know it's so hard. All right. Any more comments?
Yeah, just so like I guess with my channel, one thing I want to start to do is like I do parody videos, but I'm also going to do more fundamental analysis type stuff. That's more where my interest is, and I'm not going to be focusing on meme stocks. I'm going to be focusing on stocks that are in the news but not super overhyped. So just a little plug there.
Well, dude, I really liked your Shopify video.
Yeah, dude, that was awesome. Like, I mean, me and Jay don't even go into that crap. So, I mean, that was really good.
Yeah, I'm going to do more of that type of stuff. Like, just like a basic fundamentals type thing, you know, like what are people saying about the company? Why is their valuation the way it is? That type of stuff. So that's it.
He's gonna be bigger than us one day. Watch. All right.
I'll be telling financial jokes on stage at that point.
All right, ladies and gentlemen, thanks for tuning in. Subscribe. I know it's hard. Have a wonderful night.
Oh,
All right.
Bye. Cheers.